Hello and welcome to this Monday's weekly morning market briefing. We've got lots to talk about, but firstly, there is great fear now of a wide Middle East conflict, which could cast a great shadow over the global economy, as well as that Japanese stock exchange introduces new name and shame regime to essentially boost corporate valuations, as well as that Santander does prepare $250 billion for new investment bank expansion scheme. As well as that, we've got lots to talk about on the charts also, and lots that's happening on the economic calendar. Make sure to subscribe as we get straight into it. But first to talk about, of course, is the fears with the Middle East conflict. Now, the US has held back-channel talks with Iran to warn the Islamic Republic against escalating the war between Israel and Hamas into a broader regional conflict. Now, this comes as Israel-Gaza conflict does continue to escalate, with this being a common issue. Well, not really a common issue, but this is something that we've spoken about a lot recently, is this issue with Iran and Israel and the conflict within Gaza as well, with Gaza obviously having Hamas run it, and Hamas invading Israel proper, and the Israelis then striking back into Hamas territory of Gaza, and kind of the conflict which has ensued from that, with the US deploying a carrier strike group to the Mediterranean. And kind of Iran funding the Shiite militia groups in the north in Lebanon, which have been kind of causing and instigating conflict near the border with Israel. And so there's been lots of issues in relation to that, but it does seem to just be continuing to escalate. Now, the US in recent days has also announced that it's sending a second aircraft carrier strike group to the eastern Mediterranean as Israel's preparations for a ground offensive into Gaza heighten diplomats' concerns that the war could trigger a broader conflagration. I couldn't pronounce that right, but essentially what we're talking about here is the possibility of many other nations such as the Arab states, many other Arab states, as well as Iran and possibly even the US, getting involved in this, large Middle Eastern conflict around the issues with just, Israel invading Gaza. Now, obviously, Israel has wanted to invade Gaza as a result of kind of the terrorist attacks which did, take place on the 7th of October. However, if Israel does invade, they have had warnings from Iran's government, certain rumors around Egypt as well, and kind of all these, nations which have also warned and had, many rallies with, many citizens calling for their governments to support Hamas, and kind of all this escalation, all these nations kind of warning their involvement could cause, this conflict to, expand beyond Israel's borders into these neighbouring states and cause a wider conflict as a result, which obviously would have detrimental impacts on the global economy. The fear is that the war could drag the Iran-backed militia group Hezbollah into the war, which obviously will have great effects on the nations surrounding it, because obviously Hezbollah, is a very strong militia organization for its kind of ideology. It is a Shiite militia group. It's had involvements in Iraq, Syria, Lebanon, of course, and obviously having the backing of such a large kind of Eastern power such as Iran obviously has great issues and great worries surrounding it. Now, obviously, with that, we've already seen with Hezbollah, exchanges of rocket and gunfire taking place on the Israel-Lebanon border, and Israel has begun to evacuate, although it's quite far away, it has begun to evacuate citizens from the city Sderot, which is near the Gaza border, so warning kind of that further invasion. Now, they also did say that IDF said on Saturday that its military forces were preparing to implement a wide range of operational offensive plans, with the US and Western states being highly supportive of Israel and has reiterated its right to defend itself after the mass attack. However, in recent days, the US administration has been quick to call for the safety of Gaza's citizens and negotiated the water supplies to Gaza being partially resumed. Because as we know, Israel did cut off its water supplies, food supplies, and electricity to Gaza to try and squeeze out the Hamas militants. Now, the conflict so far has killed thousands on both sides, with civilians being worst affected. Israel's rhetoric around the expected offensive has indicated that Israel intends to end Hamas's control over the Gaza Strip. And of course, Hamas has run the Gaza Strip since 2007. So this would be a monumental change for the way that Israel and the surrounding areas are made up and the governments that surround them. And this is all the whilst, Western nations are trying to secure a safe passage for their citizens in Gaza to, flee. And this would be, crossing into Egypt through the well-known Rafah crossing. However, there's been many issues around that crossing being open, with obviously Egypt not wanting loads of refugees to suddenly come flooding into Egypt, because this could have massive impacts on the infrastructure of Egypt, which undoubtedly won't be able to support that many people all of a sudden. This obviously has had its issues because Western people, like Western civilians, then aren't also able to exit, such as US citizens. This wider threat of a conflict in the Middle East does also pose a fresh threat to the global economy, just as the world emerges from shocks triggered by COVID-19 and Ukraine. With Bruno Le Maire, France's finance minister, telling the Financial Times, if we are facing any escalation or extension of the conflict to the whole region, we will face big consequences. And this is, of course, the case as we've seen it across the world many, many times, which when conflicts like this do escalate, supply chains are disrupted, trade relations messed up, and the long-term impacts of falling international demand from that nation and falling exports from that nation does cause a drop in the world's development and the world's ability to produce things, because it all does become isolated on that conflict, and this will especially be the case for oil production, with many Arab states obviously controlling the supply of oil. Now, with the head of the IMF, because this all did come at the time, the IMF and World Bank meetings, did warn of a new cloud on the horizon, and this horizon is not the sunniest horizon for the global economy. And that said, officials did celebrate the achievement of curbing inflation without provoking recessions, but the mood did darken on the wider implications of the Israel-Hamas war, mixed with the underlying anxiety about the persistent vulnerabilities in the global economy. And this is, coming as we've exited, 2022, and also coming out of, as we end 2023. With the kind of more positive side of the global economy, where many officials at the start of the year did expect a really hard landing for the global economy, but what we've really seen coming out of it, is this more positive side, with very, very many bright spots also forming in the global economy, especially in relation to nations such as the USA, which have had significant bright spots in relation to production, exports, and now we're starting to see that fall in inflation in many countries, but not for all, of course. With the key issues to note, however, on the other side of that being worsening longer-term growth trends as economies struggle to lift productivity, barriers of trade mount, and this all comes amid worsening political tensions, geopolitical often, and public debt rising around the world. And that geopolitical tensions part very much being referenced to China, and the public debt issues being across the world really, and especially in Europe, with issues in Germany as well as issues in the UK, where public debt is a significant issue at the moment. Now, the risk of regional conflict as a result of the Israel-Gaza conflict is that it could not only hit confidence, global confidence in the economy, but also add a fresh inflationary outburst. As we've been seeing, kind of that more decline to inflation to economies that are only beginning to recover from a series of price shocks, which we of course have seen coming out of COVID and the Russo-Ukraine war, with a 10% rise in oil prices, raising global inflation by a predicted 0.4%. So definitely keep your eyes on this. Have great global ramifications, especially if an invasion does take place by Israel. So definitely keep your eyes on that. But next to talk about, of course, is Japan, whose stock exchange has adopted a new name and shame regime to boost corporate valuations. Now, Japan's stock exchange is to introduce a radical name and shame regime to drive better governance and higher valuations. Now, the Japanese exchange group, which controls the Tokyo and Osaka exchanges, told the companies in March that if it wanted to see progress towards lifting corporate value, this was the way they needed to do it. This was a critical catalyst in helping the country's markets to reclaim the ground lost after the crash more than 30 years ago. And this is not something that we've only seen in Japan. Many nations around the world have really been pushing to try and rise those corporate valuations, with issues in many nations, occurring. But obviously Japan's trying to make that push and really drive, the Japanese stock market going and towards the end of this year. And the CEO of JPX now, for the first time publicly, will name the listed companies that have complied with his request. So obviously we're likely to see a boost in the value of those companies which have complied with the requests, and therefore boosting that part of the stock market along with it. Now, this has been a breakthrough. This is in line with the breakthrough that we've seen this year for Japanese stocks, with the Tropics and Nikkei 225 indices both being up by more than 20% this year. So this is really significant growth for the Japanese stock indexes, because even if we look at it kind of globally, it's really uncommon that we would see such significant growth for such major indices for a nation. So Japan's obviously doing something right in relation to that. Now, this has been driven by a weak yen, along with the emergence of a long dormant inflation, which has given companies greater power to lift prices, as well as that geopolitics in China have also added to the strength. So firstly, to talk about in relation to the inflation, obviously if inflation does start to pick up, companies can sometimes excuse their price related increases for inflation. However, if the inflation isn't actually that great for their producer prices, so if their costs aren't rising that much, but they're increasing prices more than those costs are rising, then of course they're banking that added profit, obviously relying on that demand elasticity being inelastic. Now, geopolitics in China, that's a very significant issue which has been highlighted recently, especially in relation to US companies beginning to diversify their supply chains. Many companies have kind of started to bring their supply chains away from China as the issues within the South China Sea do continue to rise. Many companies still don't trust the way that kind of China conducts its business activity. Therefore, they're looking to kind of pull their business away and put it somewhere that they feel is more safe. And this is why we're likely to see this kind of growth in Japan and possibly even Korea. And interestingly enough, obviously, a few weeks back we did talk about how Vietnam was kind of beginning to distance itself from the dominant dominant China in the region. However, it's now diversifying away from that and trying to build its own supply chains for itself, which companies are happy with because they want to kind of move away from China as that era of Chinese dominance in the region is starting to wane a bit, with their issues around the Chinese property market and obviously their investment and kind of stock markets having great issues. Now, investors, however, have voiced concerns over there being no clear sign that the stock exchange is genuinely pushing companies to improve their cost of capital, governance standards, and engagement with shareholders. So obviously there still are issues within the Japanese stock market, so definitely keep your eyes on that to see any developments which might occur. But that's all to talk about for that article. Next article to talk about is Santander, which prepares $250 million expansion of its investment bank. Now, Santander has set aside $250 million to turbocharge the expansion of its corporate and investment bank over the next 2 years. And this comes as rivals on Wall Street prepare for some of the biggest job cuts since the financial crisis, with Santander hiring more than 100 bankers this year. And this is a really interesting kind of situation because obviously, banking has had great issues recently in relation to the rising interest rates as a result of inflation, which in turn has reduced deal making as individuals are unable to make and achieve significant loans, which would enable them to usually purchase these larger companies, and they're unable to do that at the moment as a result of these interest rates being too high, which has caused this decline in kind of corporate acquisition, and therefore the less of demand for that kind of product has led to job cuts in those related areas, and that's very important for investment banks which rely on this sort of thing. And now many of the bankers that have been hired from Credit Suisse and from the USA. So these, obviously Credit Suisse did have its collapse earlier this year, and UBS, its kind of rival, did rescue it. So it's kind of unsurprising that these veteran bankers are now being rehired by Credit Suisse to use by Santander to use their expertise. Now, Santander has been steadily growing its corporate and investment bank over the past 7 years and has been steadily growing, the business has increased from 3,500 staff members in 2016 to now 8,000 staff. So some significant changes, some significant acquisitions to its hiring process. So it'd be interesting to see how Santander kind of puts itself on the global stage for investment banking as we come to end this year. Now, the Santander executive chair did say that the business we run is very different from other investment banks. It's mostly a corporate bank, and we are now adding the fee business. The bank has been growing, however, in a number of areas such as wealth management and payments as well. And in contrast to Santander's hiring push, job cuts at the largest banks are on course to surpass 11,000 this year, as Wall Street contends with the largest and worst recruitment market since the financial crisis, following the pandemic hiring binge and the lack of deal making. And once again, this all comes back to the kind of high interest rates that we're now experiencing, in contrast to the lower interest rates that we were experiencing last year when all these people were beginning to be hired. Those higher interest rates now mean that not only do the companies have less capital to spare, but also less acquisitions are taking place, so less need for staff. So that's why we're seeing that decline. But that's all for the articles. Keep your eyes on all three of those key topic areas. They are obviously very important. But next to talk about, of course, is the charts. Now, US indices are the first to talk about, with it rising since the most recent escalation to the Gaza-Israel conflict, with Gaza kind of invading Israel's territory, massacring its civilians, and the airstrikes which ensued from Israel into Gaza. And from that, we kind of did rise. However, consolidating and seeing a slight negative reaction from this area of liquidity. And now this is kind of unsurprising, considering the inflation data which did come out. With this being, higher levels of inflation in the US than expected, and as a result, interest rates were expected to increase more later this year. That said, we didn't see that much of a sell-off in US indices despite that, just simply because US Treasury yields are now doing the job that higher interest rates are supposed to do. Therefore, there seems like there's less of a need to rise interest rates further, and that was from several Fed officials. So we didn't see that kind of significant sell-off which we might usually expect as a result from data and figures such as that. And we've kind of seen that across all the US indices, where we've kind of seen that negative reaction, but really it's starting to consolidate. So it'll be interesting to see how US indices might react going into this week with Jerome Powell's speech. And now the dollar, on the other hand, did significantly rise following the kind of inflation data which did come out, and that's unsurprising considering rates were more expected to increase now later this year. That said, however, it hasn't made new highs, which is interesting to see, because if it's not making new highs and it's not even really breaking above this prior trend line, which had some significance prior, then how significant really is it that we're seeing this rise here? Unless it's breaking above, then are we really on a bullish trend again? It has seemed to react to these areas of liquidity quite accurately. So it'd be interesting to see how it reacts to this area of liquidity that I've highlighted here, which obviously has its significance as a result of being, the left shoulder to a possible head and shoulders which is forming for the dollar. But definitely keep your eyes on the, the fundamentals and the news, as this is what will drive, obviously, the price action of the dollar, as we kind of look to see whether the dollar can make new highs or not. But next to talk about, of course, is pound yen, which has seen a negative reaction from this powerful trend line, which whilst once used to act as the the kind of bottom of this bullish channel, it is now acting as kind of the resistance line for pound yen, and we did see that negative reaction from that, and it has seemed to be making a retracement. It'll be interesting to see now whether, despite having a bullish bullish channel all this time here, it'll be interesting to see now whether the pound yen does begin its bearish kind of trend, and that would be despite breaking above these prior highs here, which did lead us to believe at the time that possibly pound yen was heading once again on the bullish trajectory. But if it is to kind of just retrace and then continue higher, definitely keep your eyes out for these areas such as the 50% Fibonacci mark, which kind of lines up with this area of liquidity here. So definitely keep your eyes on that. But next to talk about, of course, is USD JPY, which is interesting because it's kind of lined up with these, price action developments. Now, it did create this bullish flag, as we can see here, and then it did break out from that area, bouncing up above this kind of bearish trend line and using this area of liquidity as its support. It did break above it, but however, it has come into contact with this area of resistance that I did highlight, this area of liquidity, which we did believe would hold many sell orders as a result of being the prior high, and it did kind of come into contact with that and have a slight sell-off. So it does seem to be sort of consolidating, sort of retracing, and if it is to continue higher, I would be expecting a move from this 38.2% Fibonacci area, which is in line with some strong areas of liquidity, or the 61.8% Fibonacci area. So definitely keep your eyes on USD JPY as the kind of charts really do shape up for it. on whether it'll be able to break above the prior highs and continue higher. But next to talk about, of course, is Bitcoin, which is once again within this range. Obviously, we keep on coming back to Bitcoin because it does seem to be just continuing this kind of ranging movement, never really finding its way to move higher, because of course it did, fall below this prior trend line. So it'll be interesting to see how it now reacts within this range, whether now this will be a key area that it will react to before possibly moving lower, or in fact it will just continue to move sideways. So definitely look out for any moves on Bitcoin as it does seem to just continue to range. Sorry, I'm tired. Next to talk about is gold, which did see a super positive and bullish reaction following the inflation data coming out last week, which was higher than expected, and as a result warned of higher interest rates later this year, and despite that gold did make a significant push to the upside. Now the reason for this is largely the result of increasing escalations within Gaza. So definitely this is sort of the living proof of how important geopolitics is to assets such as gold, with that significant reaction taking place on Thursday and Friday simply as a result of continuing escalation of the conflict, with it coming off this 38.2% Fibonacci area, as this conflict does seem to emerge into somewhat of a long-term and possibly even a conflict which extends beyond Israel's borders. So definitely keep your eyes on gold as we go into this week, and how it might react to any geopolitical developments. Obviously we're expecting Israel to invade Gaza, so let's have a look to see how that might how gold might react to that, because that will be very important as well. But that's all for gold. Next to talk about, of course, and finally to talk about in the charts, is Brent crude oil, which has obviously seen a great positive reaction as a result of this conflict escalating in Gaza and Israel, with it now reaching this kind of area of liquidity, which has acted as prior resistance, then support, then resistance and support again, and now it's kind of pushed into this area. So it'll be interesting to see whether it reacts to it as an area of resistance, or in fact it does break higher to continue moving bullish in line with the escalating tensions with Gaza and Israel. So it'll be interesting to see how that develops. Possibly it might retrace after now coming into contact with this kind of strong area of resistance, and possibly it'll come down before moving higher from like the 50% Fibonacci mark, which is in line with that area of strong liquidity. So definitely keep your eyes on oil as we go into this week and as tensions continue to rise within Israel. So definitely keep your eyes on that. But that's all to talk about for the charts. Finally, of course, to talk about is the economic calendar, where we have lots of data coming out this week. Sorry about this. I don't know why it's bugged out, but I do have it on my notes so we can get talking about that. So firstly, to talk about, we have Aussie inflation data coming out this week. As well as that, we then have UK unemployment figures coming out, along with Eurozone and German economic sentiment data, as well as Canadian inflation data, US retail sales, as well as Chinese GDP growth rate, as well as the UK's inflation rate, the Eurozone's inflation figures, so inflation rate as well, Aussie unemployment figures, and most importantly, we have the Fed chair Jerome Powell's speech, with his rhetoric obviously being monumentally important in relation to the US monetary policy, as he does lead it. So it'd be important to hear his rhetoric in relation to any assets which involve US monetary policy. And finally, we have Japanese inflation rate. So lots of data coming out this week, lots of articles that we've covered today, and lots of charts which have seen movement. So I hope you have a great trading week. Have a great one. That's all from us at Wildwood Capital. See you later. Bye.